What are the key fundamentals for soybeans and price outlook?
Soybeans have been in a broad trading range between $8 and $9 for a considerable amount of time. It's this time of year in which the soybean crop starts going into key critical yield determining period. $8 to $9 has been the range. $8 is probably looking at a bigger U.S. crop than last year, and the fact that China is not buying as much soybeans as what the market hopes for. $9 would be that China continues to buy large quantities of U.S. soybeans, despite all the rhetoric between the two countries right now, and maybe a weather problem here and there this summer. The outlook for prices are that right now the numbers suggest that we trade lower, and the November beans trade below $8 this fall.
What are the key fundamentals for corn and price outlook?
For the corn market, we have been in a pretty tight trading range between $3 and $3.40. Recently, the nearby market rallied on some short covering by the large managed fund short position, either going into the USDA June report or seeing some little rebound in the U.S. economy as we slowly reopen the economy. We're also seeing a little bit increase in ethanol production as the reopening allows for more gasoline use. But we're still quite a bit behind where we were before the virus. $3 corn would suggest a big crop, increase in carryouts, and no weather problems. Anything above $3.40 corn would suggest there might be a weather problem, or there might be a lack of farmers selling. Right now, some of the farm aid is keeping farmers from selling, which is getting the basis very strong in the interior. The outlook for prices is assuming normal weather and a big crop. Eventually, December corn will trade below $3. And if you haven't locked in any 2020 cash sales, you should probably do it at these current price levels.
What are the key fundamentals for wheat and price outlook?
The wheat market has been trading above $5 over the last month or so, mostly because of the higher Russian prices. The domestic flour demand and price in Russia is very high, and the Russians have had an export quota that they may extend in the month of July. But on the negative side, it looks like world stocks are going to still be record high. Here in the United States, we've got a smaller hard wheat crop because of dryness than last year, but a bigger soft wheat crop than last year. It's expected that Kansas City wheat might gain on Chicago wheat. Right now, as we get closer to the Northern Hemisphere harvest, we would expect that prices would be on the defensive. And then we'll see down the road if the demand for flour, whether it's on the export side or domestic usage, rebounds enough to push wheat prices higher.
Will the 30-year Treasury bond futures continue to decline after Friday's surprise increase in non-farm payrolls?
Well, it looks like the 30-year Treasury bond futures have broken out now to the downside, and a good part of this may be linked to the anticipation that the U.S. economy may be recovering to some degree. This illustrated by the non-farm payrolls number on Friday coming in with a very sizable increase versus the expectation of a very large decline. So this trend is likely to continue for the 30-year Treasury bond futures, not as dramatically lower as we saw on Friday, but I think the long end of the curve futures will probably drift lower.
What can we expect the Federal Reserve to say at the conclusion of its Tuesday-Wednesday FOMC meeting?
Well, we have the Fed meeting on Tuesday and Wednesday. Also, there will be a virtual press conference from Fed Chair Powell. Right now, it looks like the Fed most likely will keep rates unchanged at 0 to 25 basis points. But now there is a very small possibility that there could actually be an increase of 25 basis points. I'm still on board with no change, but keep in mind it was only 3 or 4 weeks ago that there was some talk of negative interest rates. I think that is clearly off the board now. with the non-farm payrolls coming in as strong as they did. So right now, look for no change in policy from the Fed at this week's meeting.
What is the significance of NASDAQ futures advancing against the S&P 500 futures and Dow futures?
Well, the NASDAQ advancing to new record highs today is a sign that there may be some follow-through strength in the other indices as well. Keep in mind that the bull spread is long NASDAQ, short S&P or Dow. But with the NASDAQ as strong as it is, the other indices are likely to follow. So the near-term outlook appears to be bullish across the board, led by NASDAQ futures. So NASDAQ, S&P, Dow futures, all likely to firm up over the near term.
The views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.